All right. Welcome back, folks, to the Real Estate Locker Room Show. I'm your host, John Carney, and thank you for taking the time out of your busy day to tune in. I'm truly grateful for all you return listeners out there. You know, your support is what keeps this podcast successful, and I know your time is valuable, and I appreciate you tuning in to spend some of that with us. If this is your first time tuning in to the Real Estate Locker Room Show, great big welcome. We've got a great show lined up for you today. We're going to be talking to Brett Swarts, and we're going to be talking about capital gains tax solutions. That's something that we all need to become experts in. But just to remind you all, the goal of this show is to deliver you some actionable advice, something to help you elevate your real estate game today, to continue to raise the bar in your specific area of expertise in the real estate industry. So whether you're an investor or an industry pro, welcome to the show that believes that real estate is a team sport. It's time to kick in and kick off and charge into capital gains tax with an expert, Brett Swarts, on episode number 92. Welcome to the show, Brett.
Hey, John, thanks for having me.
Absolutely. You know, we're in May 2020. How you doing out there on the West Coast? You healthy and doing okay?
Yeah, we're better than we deserve. You know, there's a lot to be grateful for. And these types of moments in economic crisis and health crisis helps to really clarify all the things that we do have, despite the challenges we face.
I absolutely agree. And I think that a lot of people are taking a lot of the industry professionals and the entrepreneurs out there like yourself are really probably digging in and evaluate how to serve your community and serve your clients in the best possible way. Correct?
Absolutely. Every day we're trying to add value and provide solutions for our clients, partners, families, and friends so they can create and preserve more wealth.
Absolutely. Well, you're on the right spot, and we're going to dive into that. But if you don't mind, you know, the premise behind this podcast is I think there's a real interesting intersection between, you know, the competitiveness of top tier athletes across the world and then the competitiveness of, you know, the real estate and all the different players and all the different specialties that anyone would need to be successful in the real estate game. So if you don't mind, let's stretch out and chat about sports for a couple minutes and get warmed up.
Love that.
Cool. Do you have a like a professional athlete that's inspired you over the years?
Absolutely. So growing up, I was fortunate to play basketball, baseball, and football, and then focused on basketball and football in high school, and then was able to play on scholarship basketball in college. And so basketball as a sport has been a big part of my life, and team sports have been a big part of my life since I was, you know, a small child. So with that point, I'm watching The Last Dance. I imagine a lot of your listeners are watching that now. And so growing up, it was Michael Jordan, and it was the Chicago Bulls, and it was everything about Scottie Pippen and the team and Phil Jackson. And that was that kind of the childhood hero. And we were part of the craze of Michael Jordan, right? And so that he was big inspiration for me. Today it's LeBron James. You know, I'm a huge LeBron James fan and supporter. And it's actually funny. I'm a Sacramento Kings fan. That's my number one team. But for the NBA, my number one player for the last 10 years has been LeBron James, and now he's on the Lakers. And it's so hard because as a Kings fan, that means by opposite you can't be a Lakers fan. But I'm still rooting for LeBron, and he's my favorite player today, if that makes sense.
It does. I mean, you're cheering for excellence and a lot more, you know, Michael Jordan and the Michael Jordan era in the Chicago Bulls. To date myself, you know, the shot happened in Cleveland at the old Coliseum. I grew up in Cleveland, and then I went to college and had a lot of friends from Chicago, and the Bulls were, you know, on fire. You know, that was my college years, and it was challenging being an Ohio fan and never really being outside of Ohio or the Cleveland area to really grasp Chicago until I had the opportunity to visit. You know, and it's not until you get a little bit older and you kind of get into, you know, the rhythm of life and especially entrepreneurship that you really appreciate the discipline in the challenge that a coach has to get a group of guys, to gel together and win championship after championship. And of course, you've got the leadership efforts by Michael Jordan, and then you have LeBron James. And I'm fortunate enough that when I moved back to Cleveland in 2016, I got to watch him play a few times. And he does, if you're out there and you love basketball, whether you like LeBron James or not, it's worth it in your lifetime to try and see him play once, because it's amazing.
Absolutely.
Well, thanks for sharing that. Having a disciplined background through high school and college sports is, I think, gives anybody a foundation to kind of go in and start their own business at some time. So let's hear a little bit about the success story you have and what led you up to where you are now with Capital Gains Tax Solutions.
Sure. Well, it didn't all start at success. I had success in sports, but even then, my first initial year, I was a walk-on, and it wasn't a scholarship athlete. I was a 6-foot white guy who could shoot and play basketball and pass and know the game, but I had to work really hard to earn a scholarship. And even then, I just went to a small NAI school and had some success there, which was really cool. But the same kind of thing happened in business as well. I started out at a company called Marcus and Millichap, helping people buy and sell investment real estate, specializing in multifamily here in Northern California. And at the time, I was newly married and a child at home and trying to make ends meet. Growing up, it was also kind of humble beginnings. My parents were divorced when I was young, and we didn't have a lot of money, at least on my mom's side. My dad's side, we did. He was an entrepreneurial, successful real estate a contractor and business owner in the Bay Area. But my mom, I was with her 90% of the time. And so I just remember, the thought of, hey, I'd like to be financially free. I like to have some margin growing up. I would like to have, just not to think about money in that sense. And so going to Marcus and Millichap is, for your listeners who don't know, it's 100% commission as a commercial real estate broker. And so there's no salary, no benefits. You either close a deal and make money and survive, or you don't. And so I was newly out of college. I was newly married, child at home. And the first few years were rough. I'm talking, some years were just zero, and some years were 25,000, some years were 40, some years were 15. It was really humble in the beginning, but I had a passion, and I knew I wanted to be in investment real estate. I felt it was my calling, and I had some amazing mentors and managers who helped teach and coach me. And so I just stuck with it. And I did what every good entrepreneur does, and you find a way to keep going. And so I got side jobs. And so I was working at Cheesecake Factory by night, serving Cheesecake Factory, my wife and I's favorite restaurant. And people are telling me, go get a real job, right? What are you doing? You have 2 degrees in a minor. You're a successful college basketball player. You have all this, talent, but you're not making any money. And I said, that's okay. My wife supported me, and I feel this is my calling. So I just kept going. So we moved in with my brother in his condo. And I worked weekends also doing basketball tournaments, running and helping with the university to run some tournaments and raise some money for them too. And just kept fighting. And then all of a sudden, the 2008 crash, by the way, even before that, the 2008 crash hit. So I started in 2006 and the crash hit. And that was like the big wall moment where everything just kind of hit the fan. And it was like, oh my gosh, do I really love this or not? Right. And that's when all of these challenges were going on. And so I wanted to provide for my wife, family, but it was challenging. And then all of a sudden, a person came into our office to speak on the strategy called a Deferred Sales Trust. And I sat there, like a lot of your listeners are going to sit here and listen to this for the first time and say, this is too good to be true. You tell me you don't have to do a 1031 exchange. You tell me you don't have to overpay for a property 180 days. You tell me you don't have to bring on all this debt. You tell me these people could have been saved from all of the toilets, trash, liability, all of the heartache when the crash hit in 2008. And could have been on the sidelines, all tax deferred. And I sat there saying, this is the future, and I've got to get this out. And so that was the plan. We started to educate clients, my individual clients. I saw my business grow. Fast forward, we now have 5 kids here in Northern California in Roseville, and we've expanded the business to educate professionals who are in commercial real estate, high-end realtors, business brokers, financial advisors on how to do this so that their clients never have to face what a lot of clients faced in 2008 and unfortunately are facing right now in COVID-19 as this whole market gets kind of turned upside down and a lot of people are financially looking for solutions.
So let me just, recently we had a QI talking about the 1031 exchange. And, for the listeners out there, that's an IRS code that allows you to defer capital gains. But as you indicated, there's a time pressure, and you have to be thinking about it before the listing and put structures in place, right? So this is, you offer an alternative solution, and would you continue elaborating on the points of difference between the trust, the capital gains deferred
Sure.
trust, if I'm saying it correctly, and a 1031
Absolutely.
exchange?
Yeah, and so we back. I'll walk through that, but let me walk through my story here with how that works with the 1031. So on about day 3 or 4 at Marcus and Millichap, you learn about the 1031 exchange, and where you can sell a piece of investment property and buy another investment property within 180 days, and you identify within 45. And it helps to defer the capital gains tax and create wealth. And so we love 1031 exchanges when it's a buyer's market, when there's opportunity, when there's inventory, when price per square foot are low, when you can buy at a forced appreciation opportunity. And also when you want to be in deals, when you're younger and you're active and you really are focused on creating a lot of wealth. But there's also some big challenges to that as well, that are facing a lot of Americans right now. And this is, I'll give you a stat and then I'll walk into some of the challenges. So according to the American Bankers Association, John, there's about 17 to 20 trillion dollars that's going to pass from one generation to the next in the next 20 years. And this is known as the largest wealth transfer in the history of the planet. In fact, there's about 77 million baby boomers in the US alone, and about 10,000 of those are turning 65 every single day. And they're faced with toilets, trash, liability, debt, rent control laws, employees, and they're tired of all of that. And they maybe have a business, or they have a high-end primary home, or they have investment real estate, or they have other highly appreciated asset. And they're looking for not only a wealth transaction to change things, they're actually looking for a wealth transformation. And this leads into secret number 1 with the Deferred Sales Trust. Essentially, how to sell and defer hundreds of thousands, if not millions of dollars in capital gains tax without ever having to worry about a 1031 exchange ever again. So a 1031 exchange has unique challenges. And the first one is the timing, okay? Our parents taught us to sell high, John, and buy low. They didn't teach us to sell high and buy higher 180 days later. And unfortunately, that's what the 1031 exchange often pressures people to do, because they're deferring somewhere between 30 and 50% in capital gains tax and depreciation recapture. And they're under this tight time frame. And the seller says, hey, John, I love that you're a buyer, you're a 1031. Yep, you want to pay my top price for my property? Great. You have 45 days to identify, even better, right? Bring it on. And then you flip over, all of a sudden, that seller is now a buyer and he's faced with the same thing. So this is what happened in 06 run up. They love to be sellers, 05, 06, 07. They hate it to be buyers because of the 08, shift, and where all this debt, which leads into number 2 is essentially you have to buy equal or greater value, which often means equal or greater debt. So John, debt is not your friend in a highly appreciated overpriced market. Debt is your friend when it's a buyer's market. We call that, smart debt, or when you can find a deal that makes a lot of sense, but it's not your friend when it's overpriced. So I'll tell you about a recent deal we just closed. This is a $7.6 million property for a gentleman who sold a 128-unit apartment complex out of Georgia. And so this is before COVID-19 crash. He sold kind of at the peak. And he was looking at these cap rates that are 4.5 to 5.5 cap rates. And he's going, this doesn't make any sense. Why would I buy this? It doesn't make any sense. But he was sitting at the qualified intermediary. And he had talked to us about a year ago, and he had learned about the Deferred Sales Trust. But like most listeners, or most people learn about the first time, he thought it might be good, but he wants to keep doing it his way, 1031. But fast forward, he goes, I don't want to touch any property right now. I might not want to touch property for 6, 12, or 24 months. So what did he do? Well, for the first time in his adult life, he used the Deferred Sales Trust to save his failed 1031. And the biggest reason was he had $4.5 million of debt, $3.1 million in equity, and he didn't want to take on a bunch of debt on that new property. Who wants to be in $5 or $6 million of debt on that equal or greater value and buy another property? No one does right now. And so he got on the sidelines. He's liquid, he's diversified, and he's in the trust, all tax deferred, and basically his powder is dry. He saved $1.1 million in tax that he would have paid, and he's waiting for what's called optimal timing. And this is what the Deferred Sales Trust gives you that the 1031 doesn't. You can truly sell high, sit on the sidelines for 180 days, 360 days, however long you want, and then buy low when the market shifts. all tax deferred. So I'm going to pause there to make sure you caught that first secret.
Oh no, I'm listening with intent because the phrase, right? You know, you only know as much as you know. Don't know what you don't know, and this is not something that I've studied. So it seems it makes the ultimate sense for an investor. But your challenge, right, with your solution is breaking the mold of what people are used to, right? So that to me seems like a compelling offer, right? I get it. Now it's time to test it. Do you find that your clients, why would people not go with this solution?
Right. So let's first touch on the legality, because that's the most important question you want to ask, and the track record. And then let's also talk a little bit about why you maybe don't know about it yet. Okay. So first of all, thousands of closes, over 24-year track record, and 14 no change IRS audits. The biggest deal was $100 plus million deal in California that was audited. No change, not one single issue. So we've already proven that this thing works. We've already proven it with the IRS. We have the national law firms, we have CPAs, financial advisors, thousands of professionals who have vetted and looked at this thing, and all have said, yeah, it works, it works, it works. It's just an installment sale. We can go into that in a little bit of how it all works, but essentially it's legal. This is a track record. More so, the tax attorneys who actually do the brain surgery here for this trust, they provide legal and audit defense in case there is an audit, right? They stand behind their work. Okay. So that's very important. And then the next thing is, well, why haven't I heard about this? Well, guess what, John? If you're a multifamily owner buying and selling investment real estate via 1031 exchange, guess who's making all the money? Well, you're hopefully making some money, right? But that broker is getting a huge commission. I'm a broker. I've sold nearly $100 million in multifamily investment real estate, mostly multifamily for my clients. And I own real estate myself. And with that, I know that there's a big commission, right? That's associated with every deal. So they don't want you to know about it. Likewise, the 1031 company, guess what? They don't want you to know about it either, because they're in the business of holding your funds there to make a return. And so that's part of why you don't know about it. Also, part of it is your CPA, they're not a specialist in this installment sale. They know about carryback, right, which is IRC 453, which is the basis of our structure, by the way. It goes back to the 1920s. That's how and why it's legal. By the way, during the audits, that's what the IRS said. They said, you guys are doing something really creative. I mean, you guys do something really simple here. You're being creative with the installment sale, but all you're doing is an installment sale, which is known as a seller carryback. You have this third-party trust that's coming in, and they're buying the position, and they're selling it to the ultimate buyer. And because the seller's carrying back 100% financing, by the way, that's what happens. You become the lender in this scenario. It looks like you guys are good. No change audit, not one single issue. So the legality's there, the track record's there, but the key is more than just the actual strategy. It's actually the business professionals and the team aspect. This is important part of the theme of the show. It's the team of professionals that can help you execute the business plan. So we actually work with the 1031 companies. We have QI companies that work with us, give both options. We have the commercial real estate brokers who have joined us. We've done deals with Marcus and Millichap. We've done deals with Keller Williams. We've done deals all over the U.S. And we actually bring them all in. And another way to think about it is like the 1031. John, at a certain point, you didn't know about the 1031. Maybe 20 years ago, you didn't know about it. And then somebody brought it to you, and you said, oh my gosh, I was just buying and selling property and deferring the tax. Well, it's the same thing here. Think of it like the 1031, though, is like the old Blockbuster. It used to be an old way of doing things. You'd go to Blockbuster and you'd check out a movie and you'd have to return it, right? You'd have this short time frame, and then within 3 days, if you don't return, you get the penalty and all. They had all their rules and their ways to make money, and that's what the 1031 is. Well, there's a new way, and it's called Netflix, right? And you sign up for a subscription, and you get all this flexibility, and you get all this freedom. That's what the Deferred Sales Trust is like. It's like the Netflix to the Blockbuster. And it just gives you tons of freedom and flexibility. And the point I'll touch on right here too is the second part of the secret, which is essentially for creating an optimal timing transformational wealth plan. Back to these baby boomers. They want to be retired from the toilets to trash the liability. They want their time and their energy. They've created and preserved all this wealth, and they don't necessarily need to create more. They just need to figure out a way to how to transfer it to the next generation, which is our generation, without getting completely wiped out. But how do they solve those two gaps using a 1031? It's very challenging. Well, this is where the Deferred Sales Trust comes in. Not only do we get them out of complete debt, right? So they're debt free because we don't have to replace equal or greater value, but also we don't have to go into like kind real estate. In fact, we can put it into John's deal. John might have a syndication deal, right? A small portion. We could put it into hard money lending. They can put it into the stock market, okay, if they want to. I'm not a big stock market guy. I'm a multifamily commercial real estate guy, but if they want, some people want that, and they can put in very conservative stuff. The point is they can diversify their wealth and completely passive, truly passive from having to deal with the day-to-day operations and management. And then this thing can pass to their kids all as well, all tax deferred, and the kids can step into their position. And so I want you to think about the deferred sales trust like a box, and that box is the place where your assets, as they sell, the proceeds go into them, okay, and they accumulate, okay, into this place where now you can put it like a self-directed IRA into multiple syndications, multiple asset types, all tax deferred at any time, out of debt, and you add all of those things up, and it becomes transformational for the client versus just a transaction where you're just selling one property for another in a short period of time and all of the restrictions that the 1031 has. So I'll pause there because I know I said a lot, and you may have some questions or thoughts.
I definitely do, but I relevant the Blockbuster Netflix, because I'm from the Blockbuster era in the late fees and battling the clerk every time you were a day late, right? Especially in college. So how about this? If I'm understanding correctly, I got a question about a scenario, especially as it would relate to the baby boomers. So, you own commercial real estate, pick your sector. You've depreciated that down to zero. You can't afford to sell that property because you're going to be wiped out by the tax. So is this an option to explore for those listeners? And because the argument is, I want to sell, but I can't because of the tax liability. So I can pass it on to the next generation. It's generating cash flow. It's great, but that's what's precluding a sale. And I don't want to 1031 exchange it because, I know this asset. I've been running it for X amount of years. And why would I want to, go into something new at this age? I want to be playing golf. So is that is this sort of a solution when structured correctly with the right team of people that allows more flexibility in that transfer from one generation to another?
Yes. So two groups, right? There's the baby boomers, which we talked about, but there's also younger, active, create more business entrepreneurial clients as well. Okay. And this works for both of them. Okay. And so this leads into the secret number 3, my number one wealth building hack: how to get your deferred sales trust to work in your favor and become an investment rather than an expense. And the first one we'll touch on is a new depreciation schedule. So one of the number one reasons to own investment real estate, John, is the depreciation that offsets the income that comes in, right? Because you have lower tax. So let's say it's a $10 million property. It's producing $500,000 per year, but you can depreciate $150,000 per year. So you're only paying taxes on about $350,000, right? Although you're collecting all $500,000 of cash flow, which is amazing, right? But eventually, if you own that multifamily for 27 and a half years, your depreciation schedule goes to 0. Or if you've done accelerated cost segregation, you also maybe even faster. Okay. Now, if you 1031 that same $10 million property, John, into, let's say, a $15 million deal, guess what? You had a 0 depreciation via the 1031 rules. You only get an extra $5 million of new basis, right? Because your other basis has been depreciated to 0. And so the intent is to get more depreciation, right, to offset. But the challenge is the 1031 exchange. As you trade, your basis travels. That's not good, right? It means less. That means more tax for you. So what is the solution? Well, the solution is the deferred sales trust. And this is hands down the top 3 reasons to use the deferred sales trust for anyone who's owned real estate for a long period of time and has low depreciation. Is you could buy that same $15 million deal, but the difference is instead of buying it via a 1031 exchange, you buy it via a deferred sales trust. And by making that one move, guess what, John, where your depreciation goes from? Instead of $5 million, you get the full depreciation of $15 million.
Okay. I gotcha. Nope.
And now you can use cost seg to offset. And now you can create and preserve more wealth at a rapid pace, even more so. So that's the number one reason to become an investment rather than an expense. Does that make sense?
Yeah, everything about this strategy in service, if I can call it a service, product and service, makes total sense to me. And but it's new, and that's one of the exciting reasons why I host this podcast, is to have guests teach me something that no one's gonna, you're not gonna learn that in school, and it's applicable. So it's just another way of I look at it as another tool to create your wealth. Because, well, quite frankly, if you're a multifamily guy and I'm a multifamily guy, the people that run in our circle generally are not stock market people. And for the reason that we've invested the time and energy to learn how to generate income and take care of our families through multifamily real estate. But this does work for if you're an industrial, if you're in retail, and single family homes, I would imagine, correct?
Absolutely. So let's give you a deal about in Cupertino. It's Maxine, and she lived 3 miles from Google, and she bought her house 20 years ago. And then Google built a $5 billion headquarters about 3 miles from her, and her house appreciated to $3.1 million. Well, guess what? A primary home does not qualify for a 1031 exchange. It's not an investment property. But what she was able to do above and beyond her 121 exclusion, which basically states if you've lived here 2 of the last 5 years, you get $250 if you're single, $500 if you're married, tax free. But above and beyond that, she owed $500,000 in capital, or about $400,000 in capital gains tax. So instead of paying all that or just staying in her house and feeling trapped, she's able to sell that house. And now she's tax deferred. She's out of debt, and she took all of that equity and she moved it into passive income. She also owns multifamily. And what's cool, John, is as a syndicator or operator, maybe if people are looking to partner with you, up to 80% of the funds the next day could go into an investment real estate deal. And so for her, she's older. She just went from this big house, all this equity just sitting here, not working for anybody, all locked up. And now she's passive. She's getting the depreciation offset. She's getting the cash flow. And so as a syndicator and operator, it becomes, we think, the number one way to attract and unlock highly appreciated assets to go into your syndication deal. Likewise, on the other side of that, you may have carried interest, or a lot of syndicators, operators we work with, they don't even do 1031 exchanges because they're too complicated, right? And it's too cumbersome because the whole entity must move. Well, guess what? The Deferred Sales Trust is a solution for that. Instead of everyone having to agree, you could have 5 people do a Deferred Sales Trust if there was 10 people in a deal, and the other 5 pay their tax, right? Or you just do a Deferred Sales Trust and the other 9 pay their tax. And so we just want your listeners to know that if you're facing a capital gains tax deferral event or challenge on a primary home, a business, investment, real estate, we're doing a Bitcoin case. We're doing a horse deal out of Kentucky right now. We've done car dealerships, veterinarians, optometrists, that the 1031 exchange only works for the small sliver of investment real estate. But there's a thing called, call it Netflix, right? It's the new thing. Although it's new to you, we've already blazed the trail. Now, over 10 years, I've studied and really mastered this as a commercial real estate owner myself and broker, to how to apply all of these secrets so that you can just immediately have it by working with us. That's really the value proposition that we bring with this. But it also is proprietary. It also is very specialized. And so you need that team of professionals to help you with that. All that being said, it gives you so much more of an advantage versus just the 1031 exchange. And in some cases, the 1031 just doesn't even work for any of those assets. And this becomes really like the only option in town, if that makes sense.
Yeah, it totally makes sense. Well, that's awesome. I'm really, really grateful that we connected and you were able to share this opportunity with the audience and myself. Let me ask you a few questions as we kind of wind down. What's the number one piece of advice you would have for someone who's considering this type of exit strategy, we'll say?
Yeah, so I'd say be early and connect with us and just clarify your vision for what you want your wealth plan to be. And that's just not just your wealth, but that's your time and your energy. That's where do you think the market's at? Like, do you think it's a buyer's market, right? Do you think it's a good time to buy? Do you think it's a good time to be in debt? And if so, just keep buying real estate right now. But if you think it's not, and perhaps you want to wait on the sidelines and have some liquidity, get out of debt and wait for what we call a deal to hit you over the head, then that's why you would use the deferred sales trust, regardless if you're a baby boomer or if you're a professional. But essentially, if you connect with us, we're going to help you map out a wealth plan. And as part of that wealth plan, we're going to write a line down the middle of a piece of page, and we're going to say, continue as you are with a 1031 exchange, or continue as you are with a deferred sales trust, or a mixture of both. And we're looking at all of the pros and cons side by side, and then let you decide what's best for you. And one of those, for example, is the estate tax. We're doing a deal right now, John, for a couple out of San Francisco. They're worth over 125 million, and they've been able to move 25 million outside of their taxable estate through estate planning. But that other 100 million is stuck in there. Well, guess what? If you continue with 1031 exchanges, you can't move it outside the taxable estate. I mean, you can do some family limited partnerships and you can do some gifting along the way, but it takes a long time and they can't get it out fast enough. Well, the intent is to get it out quickly, and the challenge is the 1031 doesn't give that to you. But the solution is the deferred sales trust. And one single day and one single transaction, we can move all of the funds outside of the taxable estate. So let's give the ramifications of that. So if you're worth $22 million or more and married, or 11 million and you're single, anything above and beyond that's going to be hit with a 40% death tax. Okay. Known as the estate tax. By the way, has nothing to do with the stepped up basis. Most people think, well, if I just get a stepped up basis, I die and I can walk away capital gains tax free. That's true for capital gains tax, but it has nothing to do with the estate tax. So for anyone who's ultra high net worth who's listening to this, we can move all of the funds outside the taxable estate in one single transaction in one day. So that's exactly what they're going to do. They're selling a $20 million deal to start. They're going to move it all outside the taxable estate. And now they're going to save $8 million for their estate. What does that mean they can do? Well, they can give more to charity if they want to. They can give more to their causes they believe in. The why behind what we're doing is to keep the funds and the taxes and the equity inside of our families, our friends, our clients, rather than giving it to a government who wastes it away about that quick. Okay. And so and so they can give more to charity if they want to, or just give for their own family. We're not going to force any charity on anybody else. So we want to just make sure you clarify what your plan is and what the ramifications are. Also with the new depreciation schedule, staying in debt, having all that risk. We just don't want anyone ever to feel trapped by capital gains tax ever again. So when you have this strategy and you're empowered with it, they call it the blue ocean versus the red ocean. The red ocean is where all the sharks are swimming and all the blood's in the water and everyone's competing on a different level. But if you can swim in the blue ocean where you have all the time and freedom to buy, that is what we call optimal timing. And that we believe is the single best way for you to create and preserve more wealth. And I can maybe leave you with one last story. We call this the Monday morning quarterback. And I guess this hits on the sports theme too. In 2006, it's the most prolific deferred sales trust client story I think we know of. He sold at the peak, okay? And this gentleman's worth over $350 million. And he sold at the peak. And he's a commercial real estate genius, expert. He's just made a ton of money in commercial real estate. And he moved his funds into the deferred sales trust. And 5 years later, that same property he sold, John, was foreclosed on. And guess who the bank called first? They called him and they said, hey, you know that property you sold 5 years ago? Yeah, well, we just foreclosed on it. Would you like to buy it? He said, maybe. What's the price? They said, how about 40% less than what you sold it for? Okay, it sounds like a good deal. So he bought it back through his deferred sales trust, all tax deferred, at 60 cents on the dollar. He played the Monday morning quarterback. He dropped back. He timed it perfect. And he sold high and bought low. And guess what? He got a brand new depreciation schedule on that. So most listeners that are hearing this, and this is like me and Marcus and Millichap 10 years ago, my mind was blown and it's too good to be true. It's too good to be true. My CPA would have told me about it. My commercial broker would have told me about it. No, we didn't know about it at Marcus and Millichap until 10 years ago. And now we know it. And now we know how to execute it. And so that's what we want to empower you with, to have optimal timing and to create a wealth plan that truly is transformational versus just transactional.
I love it, Brett. Look, two more quick questions for you. Is there, avid reader, I'm sure you are as well. Is there a book? It doesn't have to be about this, but is there a book you've picked up and read recently that you'd recommend our listeners pick up?
Absolutely. It's called The Seasons of Life, and it's by a gentleman named Jim Rohn, R-O-H-N. And it talks about the human condition and how we are constantly in and out of different seasons, whether it be spring, summer, fall, or winter, right? And that's financially, that's emotionally, that's spiritually, that's our health, that's with our family, and recognizing that these are certain patterns that and laws of nature and laws that God has given us. Where, like right now, COVID, it's kind of like a winter in a lot of ways, in every single way, right? For a lot of people right now. But realize there's going to be spring, right? And it will change. The sun will come up again. There'll be a brighter morning, but it does take perseverance, and it does create opportunity to clarify what's truly important in our lives and what are the things that really matter. And that's where winter can help to, I guess, kind of clarify things, because it focuses us to focus. So take advantage of that and be grateful for that and let that work through. And so that Seasons of Life book, it's a pretty short read, but it's an amazing book, so rich that you can pick up and just reread multiple times, by Jim Rohn.
We just finished our lockdown Netflix, put an end to it, and I'm back on the stack of books that's been creeping up on my nightstand. And so that's one that we'll definitely add to the list. So you have a ton of energy, a lot of enthusiasm. You're obviously fired up. You're solving problems for people. Give us a little insight into, a routine or a habit or something that allows you to wake up every day and bring this A game, to the table.
So I'm a Christian, and so my source of strength and endurance and energy and just passion for life and helping people starts with my faith in God and Jesus. And a part of that is a ritual I try to practice, is called the Miracle Morning by Hal Elrod. Your listeners probably know about this, but essentially wake up and you're doing a number of things. And one is reading. I read the Bible every day. I meditate. I visualize the day. I do some form of exercise during the day. It might not be right away, but during that day. And then I haven't done the journaling as much as I should be. But those are some of the main areas that I'm practicing in the first, call it 15 to 30 minutes every single morning, as well as just health-wise, TB12 with Tom Brady's book. You haven't read that book yet. It's really also a transformational way to approach health and fitness that I wish I would have learned, 10, 15, 20 years ago. And that has 12 principles to try to help and keep your energy and your strength up as well, physically, but also emotionally and other ways too. So that's a big book you might want to check out as well.
Perfect. I appreciate it. Well, there you have it, folks. I definitely hope that you picked up some actionable advice and follow through, because as you know, all the links to hook up with Brett will be in our show notes. Where can the audience find you? Do you give us your links to social media and how they can contact you if someone wants to reach out as soon as they hear this?
Yeah, thanks, John. They can go to capitalgainstaxsolutions.com. They can also search that on any podcast platform, as well as on YouTube, and then LinkedIn, Facebook. We have around all the kind of the social media. And also, too, as a free gift for your listeners, they can go to capitalgainstaxsolutions.com and they can download our free guide. It's the Escape Feeling Trapped by Capital Gains Tax Guide. And it'll give you the major overview of this versus the 1031 exchange, as well as just the basics behind the structure and the legality, so you can get an introduction to the team. And then, of course, if you have a live deal, we need to get to you before you close escrow, right? Or before your exchange fails, okay? We need to talk to us sooner. So you can go ahead and just schedule a free consultation call. And also we have a Deferred Sales Trust calculator that you can use. You can go there and fill in your information, and that'll give a side-by-side comparison of use the Deferred Sales Trust versus just pay the tax. All of those are free resources. We only get paid if and when you do the deal. And for any reason the deal falls apart, we get paid zero. So no pressure. We just want to give you clarity on what the options are and give you a chance to make a decision.
Perfect. Well, Brett Swarts, guys, you know how to track him down now. And then, the post-game report, show notes, links, and additional content related to today's conversation will be at johncarneyonline.com/podcast. We're episode 92. And, if you like what this show is all about, I'd be grateful if you'd look us up on your preferred podcast platform, the one you're listening on now. But we are on all the likely sources: iTunes, Spotify, Google Play, iHeartRadio, and Stitcher. And leave us a review. It helps other like-minded real estate investors just like yourself, find the content from our great guests like Brett readily. And, the power of the podcast and conversation and be able to connect, not only during this COVID time, but, in general, you accelerate your knowledge base, your network, and that will all trickle down to helping you make smart decisions with your money and look after yourself, look after your family. All right, folks, remember to stay focused on your goals, have fun, and stay in the game. I am your host, John Carney. Until next week, work hard, play hard, and raise the bar. And thanks for joining us today, Brett.
Thanks, John, for having me. My pleasure.